Here's a summary of the Skyworks, SWKS, Q3 Fiscal Year 2025 Earnings Call, suitable for reading aloud. Good day, everyone, and welcome to the Skyworks Third Quarter Fiscal Year 2025 Earnings Call. Skyworks delivered strong results this quarter, exceeding expectations across revenue, gross margin, and EPS. Key financial metrics. Revenue. Skyworks reported revenue of $965 million, which was above the high end of their guidance. Earnings per share, diluted EPS came in at $1.33, also exceeding the high end of guidance by 9 cents. Gross margin was 47.1%, above expectations, driven by product mix and cost discipline. They project gross margins to be approximately 47% plus or minus 50 basis points for Q4 FY25. Free cash flow. The company generated $253 million in free cash flow, representing 26% of revenue, highlighting strong working capital management. Shareholder returns. Skyworks returned $430 million to shareholders this quarter through share repurchases and dividends, and over $1 billion in the past 2 quarters. Management's forecast for future quarters. For the fourth quarter of fiscal 2025, Skyworks anticipates revenue ranging between $1 billion to $1.03 billion. Mobile, mid-single-digit sequential growth, with healthy sell-through, lean channel inventories, and solid order visibility. Broad markets, expected to grow sequentially and year-over-year, with continued strength in bookings, backlog, and channel sell-through. Gross margin, approximately 47% plus or minus 50 basis points. Operating expenses, projected to be between $235 million and $245 million, including about $7 million related to a 14th week in the quarter. Diluted EPS, expected to be $1.40 at the midpoint of the revenue outlook. Skyworks is not providing guidance beyond the current quarter, but noted strong demand across both mobile and non-mobile sectors, a solid book-to-bill ratio, and low inventories. Highlights. Mobile strength. Revenue exceeded seasonal trends, with continued strength in the September quarter driven by healthy sell-through at their top customer and new product launches in Android. Broad markets momentum. This segment, including Edge IoT, automotive, and infrastructure, showed sequential and year-over-year growth, with accelerating demand and strong bookings. AI and smartphones. Early demand for AI-capable phones is encouraging, and Skyworks believes this could eventually drive an inflection in upgrade cycles. Edge IT and Wi-Fi 7. Adoption of Wi-Fi 7 is accelerating, leading to greater RF complexity. Skyworks is already investing in Wi-Fi 8. Automotive growth. This remains a key driver with long design cycles and durable revenue streams, evidenced by securing new programs with OEMs like BYD, Ford, and Nissan. Data center and infrastructure rebound. Business activity is improving with inventory normalization, and the shift to higher speed switches is driving demand for their precision timing solutions. Manufacturing optimization. The planned closure of the Woburn facility and consolidation into Newbury Park is expected to drive higher fab utilization, lower fixed costs, and improve overall efficiency, ultimately benefiting gross margins. Strong cash flow and shareholder returns. Significant free cash flow generation enabled substantial returns to shareholders. Lowlights/risk factors. Smartphone replacement cycles. These remain historically long, averaging over 4 years. Customer concentration. While not explicitly stated as a lowlight, the CEO acknowledges that single customer concentration is likely suppressing multiples. Volatile December quarter. The company noted that the December quarter has been more volatile in recent years, making predictions challenging. Competitive pricing environment. The pricing environment remains highly competitive. Most important statements from management. CEO Phil Brace. Skyworks delivered strong results this quarter, fueled by an upside in mobile and sustained strength across broad markets. He highlighted the potential for AI-capable phones to drive an inflection in upgrade cycles, leading to a potential tailwind to volumes and content over time. Regarding diversification, Brace stated, "It's hard not to think that the single customer concentration we have is certainly probably suppressing our multiples compared to what it otherwise would be. So obviously, kind of diversification and growing the business is important." He emphasized a strategic approach to diversification, prioritizing things that are gross margin accretive, a little stickier, have a little, we'll say, a longer time constant of the revenue to help balance some of the potential volatility. On the Woburn facility closure, he noted it's designed to drive higher fab utilization, lower fixed costs, and improve overall efficiency. Interim CFO Rob Schriesheim. Skyworks delivered revenue of $965 million, exceeding the high end of our guidance range. He confirmed the strength in broad markets, marking the sixth consecutive quarter of growth and reflects stronger end demand and further inventory normalization across key verticals. On future outlook, he stated, "We expect revenue to range between $1 billion to $1.03 billion. For Q4 FY25, he reassured on operating expenses, noting, "We'd expect it to trend lower in the December quarter," and emphasizing discipline for FY26 and beyond. In summary, Skyworks had a strong third quarter, driven by robust performance in both mobile and broad markets. They are strategically investing in future growth areas like AI and automotive, while optimizing their manufacturing footprint. The company is focused on continued execution and maintaining financial discipline as they navigate a dynamic market.